Welcome to the Lean Out Your Business podcast, a show dedicated to helping entrepreneurs accelerate business growth and simplify success. I'm your host, Krista Grasso, and I've been working with businesses for more than 2 decades to help them lean out and optimize what's working while eliminating anything that's not adding value. So if you are ready to get more time back in your day, more profit in your business, and to do business differently, growing and scaling on your terms, let's dive into today's episode. Hello, and welcome to another episode of the Lean Out Your Business podcast. Today, I'm joined by Geneve Huxley, and we are going to be talking all about how to turn financial mystery into mastery, which I'm really excited for today's conversation. So, Geneve, thank you so much for being here today.
Thank you for having me.
Absolutely. Let me tell you a little bit about her, and then we're going to dive right into today's topic. So, Geneve is a CPA with over 20 years of experience, and whether it's figuring out and increasing your profit margin, forecasting and budgeting, overseeing your bookkeeping, or interpreting your financial reports, she understands the stories behind the numbers, and she acts as a fractional CFO for her clients. She is a whiz at decoding and unraveling complicated financial mysteries, and her superpower is helping her clients gain clarity in their business financials so they can improve their bottom line, which is incredibly helpful, especially for those of us like me who do not have a financial background and all finance feels like a little bit of a mystery. So I know I say that kind of joking, but that being said, I know for a lot of entrepreneurs, especially those who don't have a financial background, the numbers can be a bit of a mystery and it can get a little overwhelming in what should I be looking at and how do I know when I'm ready to hire and all of those things. So I want to dive into a lot of those topics today, but where I want to start is where do you see business owners make some of the biggest mistakes or have some of the biggest challenges with financials because maybe they don't have that deep understanding or background?
Yeah, it's a common problem with small businesses. And what I find with a lot of the companies I work with, they don't know what they don't know. You know, they maybe have an inkling of something financial is a little weird, but I don't really understand why. I don't know what's causing it. And I can come in and help kind of decode that and unravel it for them and say, here's what's causing that issue. Here's how you fix it. So that's very much what I do for my clients. You know, some of the common problems that I see are one big one is having a good bookkeeper that understands accounting. There's a lot of people that call themselves bookkeepers that don't understand accounting, and there's a big difference. And if the business owner doesn't understand accounting either, they won't necessarily know that somebody's doing it the wrong way, and it's not obvious. And so one of the things that I frequently frequently find with clients is that there's always a little something. Even if they have a pretty good bookkeeper, there's always something that's weird in their books that their bookkeeper is doing. But the business owner's like, oh, it looks good to me. And so it's something that I frequently have to address. So that's, I think, one problem that I think a lot of business owners don't know they have. They think they've got a good bookkeeper, and it's really not somebody that's doing it properly. But it looks right unless you're trained to know what they're supposed to look like and you've had that education on them. It's hard to tell. You know, if I don't know how to work very well on a plane engine. And so if somebody says, Geneve, this plane engine broken, and where can you tell us it's broken? I don't know. I don't know enough about planes. Does it fly? No. Okay, it's broken somewhere. But so it's hard for them to tell. Another place I find that business owners frequently struggle is, especially in the service industry, they don't have a really good handle on how much it costs to provide their service. You know, if you're selling widgets or you're selling pens or something, it's a lot easier to tell how much it costs you to buy that widget, paint it red, and then sell it again. That's much more direct and easy. But in the service industry, you're not buying widgets. So it's harder to tell what it really costs to provide the service. And so frequently that leads to companies underpricing their services and losing money, but not really knowing where they're losing money. So those are a couple of examples of some things that I think businesses frequently struggle with.
Yeah, and as somebody who owns both a product based business and has a service based business, it is night and day different. It's actually, even though a product based business is complex because of all the moving parts and managing manufacturing and all of that that goes into it, it is a lot easier to understand your cost of goods sold. It's a lot easier to understand your profit margin and to know which products are profitable and which ones aren't. It actually does make it a little bit easier to understand those things, whereas when you have that service based business, as you said, especially if you have multiple offers and the offers are structured very differently. You've got a coaching program, you've got private coaching, you host events, you do a done for you service, and then you have a done with you service, and it's kind of apples and oranges across what you're doing. It can get really complicated to try to figure out what is the profit margin and what does this look like. So, do you have any tips or anything that you do with your clients to help them figure all of that out?
Uh, Quick tips. Well, when it comes to pricing your services, you need to have everything included. You need to have your the time of the people that are going in are providing the service, how much time, who, but not only just their salary, also their payroll taxes and their benefits, and if you have a 401k matching program or an IRA, simple IRA program, all in, that's one cost. But then you've got to calculate the overhead, right? And you've got to have a proper allocation of that overhead to make sure that you're actually profitable. And you need to add the profit in to make sure you're profitable at the end of the day. So it can be hard to kind of piece through all of that. It's actually one of the services I provide for my clients because it can be so complicated. But it's I guess the other thing I'll say is if you send, kind of like dovetailing off what you said, if you have, 10 different products or 10 different service lines, I will say, and seven of them are profitable and three of them are not, overall on your financial statements, you'll see profit. You think, great, I'm doing great, I've got a profit, right? But if you learn enough about all of those pieces, these three are losing money, you can either raise the prices on those three or cut them out entirely and your bottom line goes up. So that's one thing that it can really make a difference to not just know in total, but for different services that you provide, how much does it cost you to do that?
Yeah, that's such a great service that you offer because I do find a lot of times people will look overall at their business and they'll say, well, I'm profitable, but they're wondering why they're really struggling with cash flow and they're wondering why it doesn't feel like they have enough, margin to reinvest in their business. And usually it's because they do have some services or some offers that aren't that profitable, but they don't know how to break it down to tell which ones it is. So,
Right,
super valuable.
right, exactly.
Now, one of the things that you shared was with having a bookkeeper that maybe is missing something, but you don't know that they are. So, what's the impact of that?
Oh gosh, it's a myriad of things. There's so many things that can come out of that are hidden. One is, your net income is you've got a bunch of money one month, you have a great profitability one month, and then you have a huge loss the next month. Then great profitability the month after that, then a huge loss after that. And so it just zigzags through. And so if your bookkeeper is not properly accounting for inventory, if you're tracking that from a product perspective, then you won't know if you're actually profitable or not and what your books are supposed to look like. So that's one example. Another example is if you don't account properly for payments on loans, those payments have a principal and an interest portion. And if you're not doing that properly, that can affect your tax return because you may be thinking, I have XYZ income throughout the year. And then at the end of the year, when your tax person goes to prepare, they'll make an adjustment to your net income number to correctly allocate the principal and interest. And you'll end up with either a huge refund or a huge tax bill that you've got to pay because it wasn't done right at the beginning when you made your estimates along the way. So it can make a really big difference if somebody's not doing it right. And then also for me and for anybody else that's providing CFO services to a business owner, I'm only as good as the data I can get a hold of that's good data. It's kind of like garbage in, garbage out. If your books are a mess and they look strange and they're not making sense from an accounting perspective to me, it really limits what I'm able to help you with to really grow your business. It ends up making the first step in all of that, getting that stuff straightened out. And so I can provide guidance to an in-house or an outsourced bookkeeper to tell them what they need to change and what they need to fix to get it correct. And then once it's correct, okay, now we can start taking a look at what your ratios look like, what should they be, how should things look, and where do you go from here. But before I can get to that information, I need good data. And it really comes down to proper bookkeeping for that.
Yeah, and I feel like that's true of almost everything in your business, right? It's you can only make gut-based decisions and go for so long. You need good data. And what better place to make sure you have accuracy in your data than your financials because it's critical for your business. So, can you walk us through? There's so many different types of financial roles, and sometimes I think it can be a little overwhelming to know who you need when and why is this person different than this person. So I'm going to rattle a few. I'm sure I'm going to miss some. You could fill in the blanks. But I think of CPAs and bookkeepers and financial planners and advisors. And then there's the person who does taxes, which is sometimes one of those, but sometimes not. And then CFOs and, as you are, fractional CFOs. So what am I missing? And like, how do we know what we need when?
Great question. It does get complicated, and I often find companies have never heard of a fractional CFO or they don't know what there is. So, just to break it down, a CPA is really just a certification from the state board of accountancy in whatever state that person is licensed in. That CPA can take that certification and offer a variety of different services. So, just because somebody is a CPA does not mean that they do taxes, which is my situation. I don't do taxes, but it's very frequently associated with it. There's CPAs that own bookkeeping and accounting firms that also don't do taxes, but maybe they do or don't provide CFO services. So the CPA is just kind of denotes a level of expertise and training and passing certification by the state. A bookkeeper is somebody that is it's transactional day to day. They help record your payments from customers coming in the door. They invoice your customers. They also pay your bills to your vendors. They track your inventory. If they are doing it properly, they track your inventory and take care of all that day to day stuff. That's what a bookkeeper does. A controller is a step up from bookkeeper, but in between and below the chief financial officer. So a controller is something that businesses, once they get more complex, start to need to have somebody in-house that has kind of a higher level of accounting and bookkeeping understanding than most bookkeepers. So they would do a month-end close process. They would track your depreciation on your fixed assets. They would reconcile your deferred revenue. Lots of things on the balance sheet and the income statement to make sure that everything gets captured in those monthly financials before actually closing up the month. So it's kind of a halfway between a bookkeeper and a CFO. And then a CFO is really that top level person that's like a right hand person to the CEO that helps the CEO understand all the financial impacts of every business decision that is made and helps look at the business overall from a financial strategy perspective, helps with forward-looking information, budgets, revenue forecasts, cash flow forecasts, a what if analysis. What if we open a new location? What if we expand our online offerings? Things like that. So higher level what if analysis, financial strategy is at the CFO level. And then I will say there's two different types of tax people. There's tax preparers and there's tax advisors. Tax preparers just take all of your numbers and fill out the tax form, and that's it. The tax advisor will look at your numbers and say, gosh, I see you're doing this, but you could save a lot more in taxes if you do something else a little bit differently. Let me show you what that looks like. And so while the tax preparers charge less money to prepare a tax return, you don't know how much you're losing in extra taxes that you pay because you didn't get the right advice at the right time for that. So there's no technical differentiation between a tax advisor and a tax preparer. That's just my opinion on that, but that's something I've found. So don't evaluate your the tax preparer by price alone. You have to think about what are they going to save me in taxes from that guidance. And the last I'll say, a fractional CFO is kind of like a part-time CFO or an outsourced CFO. What I see in a lot of small businesses is they could really use that financial expertise from somebody to help them run and grow their business, but they don't need it somebody on a full-time basis. And a full-time CFO at 40 hours a week can be very expensive for a small business to have, several $100,000 a year in salary. And so having access to somebody on a smaller part-time basis, but still having access to that expertise level is really beneficial for small businesses because it helps them bridge that gap between not having anything with financial strategy until they need that full-time in-house CFO. It's somebody that can help bridge that gap in the meantime, and it's much more cost effective because it's not a full-time position.
Yeah, I think that's great. And thank you so much for that breakdown. That's very interesting. And there's so many different levels to good financials, which just makes me think when you don't have good control over your financials or you don't have the right financial support, where are some of those places where businesses leave a lot of money on the table beyond just some of those potential tax savings or tax implications?
Yeah, that's a great question. A lot of times with software companies, they are missing not charging license fees, ongoing license fees. If they charge that, they have an ongoing revenue stream going forward with that takes very little work, and that is something that's heavily looked at once you're ready to sell the business. So that's one thing that I see software companies sometimes missing because they maybe don't want to be like the big guys and charge a license fee, but that is definitely leaving a lot of money on the table because people expect it nowadays. Everybody does it. Another place I think people leave things on the table is leaving money on the table is with pricing their services. So services pricing for value instead of actual time, right? There's a saying, and I'm not going to remember who it is that said it, that says, if it takes me 10 minutes to do something, it took me, 30 years to learn how to do it in 10 minutes. You owe me for the years, not the minutes. And I think there's a lot of service companies that don't charge for those years. And that's another place that sometimes money gets left on the table.
I'm so glad you said that because I see that so often with clients when I'm working with them, because to us it's like, oh well, it's quick and easy. I can do that in an hour. I can do that in half a day. I can do that in a day. But they don't take time to appreciate the fact that the only reason why they can do it that quickly and they can do it with the level of excellence that they do it is because of all of those years of experience. And it's not about the fact that it only took them a day. It's about the value that the client is going to get from what they just did. And if you can do it for them in a day and somebody else can do it for them in a week, there's a whole lot more value on getting it done quicker and with higher excellence than it is just that it only took you 6 hours or however long it did to do. So I'm so happy that you shared that.
Yes, exactly. We definitely agree.
So, one of the questions that I get asked all the time, and I'm really curious to hear your perspective on this, is somebody wants to hire, but they feel like it's a chicken or egg scenario. Like, I need to generate more revenue or I need more profit in the business before I can hire. But they kind of need that hire to maybe be able to drive more revenue in the business. So, how, from a financial perspective, can you tell that you're actually ready to hire or get yourself ready to hire?
It is a tricky question, and there's a lot of things in play. It's very complex because you have to think about what are you giving up? Like, what's the best source use of everybody's time? What's the best use of everybody's time? If the CEO is doing administrative tasks instead of making more sales, that's costing the company money because if they offloaded those administrative tasks, then they'd have more time available for sales. So you have to think about not just like the salary and benefits cost to the employee that you might be hiring, but what capacity are you freeing up for other people that will then allow you to build revenue in other places, increase sales. It depends upon what kind of employee you're looking to bring in the door. So it's a push pull kind of a thing. It definitely feels like a chicken and an egg. What I usually think about is, it's time to hire once you have, if you've really stretched and everybody's stretching really far as much as they can, and you have good cash flow, you're profitable, and you are ready to take the next step. So you hire another employee, which, by the way, does not have to be 40 hours a week full-time employee. Don't forget, there are people looking for part-time work out there as well. And then as soon as you hire that person, it's going to take a little bit for them to get up to speed to really transition everything to them that you need to transition. And so for those coming few months, your profitability is going to go down. So it's going to be, your profitability is going to grow and should stretch farther a little bit at the beginning of before you hire. And then you're going to kind of use up that savings to make up for the loss that you have, or the lower profitability you have in the months just after that hire, until you kind of get back into that level stage where you're able to actually increase everything overall.
Yeah, such a great point. And I find, because I help people with planning so often, not from a financial perspective, but just in general, a lot of times people think of the activity, but they don't think about the before and the after. And I
Mm-hmm.
think this is a really great example of not just thinking about the hire, but thinking about the things you need to do before you hire. So making sure you have the profitability for it. And then thinking about the after, that you're going to have a dip. You're going to have a dip where they're not immediately generating revenue, they're costing you money, they're costing you time, but in the end it's going to be for the result that you're looking for, but it's not an immediate thing. And I think sometimes people don't think of that. They bring the person in and then 2 or 3 months later they're stressed out because they're like, I just spent all this money and there's nothing new coming in. And it's like, nothing new is going to come in yet. But if you had really thought about that and really prepared for that, not just, financially, but strategically, very holistically, then I think the expectations are different. So really, really good thing to be thinking through.
Yes, definitely agree.
Excellent. All right. So I want to talk and dive a little bit more into fractional CFO
Mhm.
because obviously that's what you do. That is your expertise. And so, at what point in our business do we know that we're ready for a fractional CFO? And what are some things that we should be looking for to make sure that we're getting somebody who's capable, but also a really good fit for our company?
Yes. So I usually recommend people start considering looking for a fractional CFO once they hit that seven-figure $1 million revenue mark. Usually, companies that are smaller than 1 million in revenue, the best thing that they can put their money towards is a really good bookkeeper that understands accounting and can get them that good, solid data. So when they're ready to hire that CFO, that fractional CFO, that person has good data to rely on historically. So it's, I would say, roughly about that $1 million mark there.
Yeah, that makes so much sense. And so, what are some of those things that you want to be looking for when choosing the right fractional CFO that fits with your company culture and that you just know is really capable and is going to do an excellent job for you?
Yes, it can be hard to think about where to find it. It's not usually the kind of position that you want to sort of flip open the yellow pages or a Google search and say, I need a fractional CFO. I'll just pick one on the list here that pops up first. You really want to find somebody you can trust, because you've got to open up, the business owner has to open up all of their financial records, the good and the bad, to the financial CFO if they really want help. So they have to be willing to really trust that person with all of their data and all of their information. So I recommend that people talk to their trusted advisors they currently have, other business coaches or business advisors who they trust already, and ask them for recommendations. That's the first place I would start. And then you want to find somebody that's got the right level of expertise that you're looking for. Whether it's industry, sometimes industry matters, sometimes it doesn't. But finding somebody that's got that expertise that you want to have and that comes with really good referrals. Sometimes what happens to me is I live in a smaller town, and I'll get a referral from one of my sources to one of their clients, and then that business owner had asked a couple of their trusted advisors, and they'll get my name from more than one person. And they'll say, "Gosh, I guess Geneve, you're the one to talk to." so, so ask several trusted advisors who they trust, who they think would be a good fit, and then have a conversation with them. See how their rapport is. Do you feel like you get along with them? Because there's going to be a trusted relationship. You need to be sure that you're comfortable with it and sharing the good, the bad, and the ugly with the person, because that's how they're best going to be able to move your business forward.
Absolutely. Now tell us a little bit about what you do. So what are some of the services that you offer? How do you work with your clients? And do you have anything exciting or interesting coming up that you're really looking forward to?
Sure. I really enjoy working with my clients and being that right hand person to help them run and grow their business, and giving them that financial guidance that they don't have to really make a difference in understanding their numbers, which is a critical piece to moving businesses forward. People can find out more information about me at my website, huxleycpa.com. And in case I need to spell that, it's HUXLEYCPA.com. And as far as things coming up, I really like educating my clients too. And so one of the things that I have on my website are articles that I've written about various financial mysteries that I have seen business owners struggle with, and some tips on how to make it better and how to really start to figure things out. And I'm always excited to share this information. People might be thinking, gosh, it's an article, it's on finances, boring. So I try to keep it a little bit more lively. People have said that I'm the accountant with the most personality they've ever met, which I think I'm thankful for. But so I try to keep it a little bit more lighthearted and kind of bring some analogies to it to really make it make sense and bring it home for business owners and help them out. So I'm always excited for that monthly article to come out.
Yeah, and I've seen your monthly articles. I think they're excellent. And I think it's something, especially as I shared before, not all of us have a finance background. And if you don't, I think you do need to be educated on it. It doesn't mean that you have to do your own books or any of that, but you have to understand your numbers. And I think the more we can educate ourselves, the better equipped we're going to be to make decisions in our business and not have to only rely on somebody else who's interpreting our data for us. So I love your articles. I think they're excellent. You'll find all of the links down below in the show notes. So make sure that you check those out. Now, there is a question that I ask everybody, and I can't wait to hear what you have to share. And that is, how do you work smarter, not harder, and keep things lean in your business?
Yes, I am somewhat addicted to efficiencies, I will say. It's almost like a drug. I cannot stop my brain from thinking about the most efficient way to do things, not just from a business perspective, but also from a personal perspective. Like, which route do I take to get from point A to point B that's going to be the most efficient? Now, with Google Maps, that's kind of done for you. But I can't help my brain from always trying to think of faster and easier ways to do things. In my business, I what I do is I keep an eye open for when I need an expert to hire in. Prior to going out on my own and doing my own consulting company, I had no experience with sales at all, because all of my career had been in accounting and finance. And so I hired some experts to help me out with sales and marketing, to be sure that I had a plan, I understood how it worked, and train me on it. I have a marketing team that I work with regularly to help with that, and I have a virtual assistant that helps me for a few hours a month. And that I surround myself with people that are experts in areas that I'm not an expert. And I didn't start that way at the beginning of my business. I did it all. But as I grew, I added a little bit in here and there about what was the next strategic move for my business to help me allow me to expand, and what's that next piece going to be. And I always think about what the most efficient way is to do things. So it's one of my sign offs on my email is, I hope you have a productive and efficient day, because I think it's just so much more satisfying to do things smarter and not have to work as hard, and finding out new little tricks in Excel, which is gets me kind of excited. I'm a little bit of an Excel nerd, and finding those little efficiencies in different things that you can everywhere. And one last piece I will say that I heard somebody else say was everything can be delegated unless proven otherwise. So don't think about what can you delegate. Think about everything, delegating everything, and only bring back things that really you can prove cannot be delegated. So as you grow your team, think about it from that perspective. And I think it's kind of flipping the coin over and looking at the other side.
Brilliant. I absolutely love that advice. I think that is going to be the quote of this episode. So yeah, and I agree. I love your tips. I think those are great. I am also very much an efficiency advocate. So I think we can have lots of fun with that. But thank you so much for being here and for sharing all of your wisdom with us. I have one final question, and that is, do you have any tips for people when it comes to making the most of their financials so they can be confident in the decisions that they're making in their business?
Take some time to think about it. Don't go with your gut. Try to figure out what you can solve. Ask questions from different ways. Play devil's advocate. Think about it from different areas and think about the pros and the cons. And sometimes getting more voices in the room is helpful, whether that's other employees of yours to brainstorm new revenue lines of business, revenue streams. Thinking about it that way with more brains in the room sometimes helps people kind of break out of the box that they're in initially.
Brilliant. Well, thank you so much again for being here. I hope you all got so much value out of this episode. We will see you again next week. Thank you for joining me for another episode of the Lean Out Your Business podcast. I hope you got a lot of value and actionable insights from today's show and would love if you take a moment to leave us a review. If you have any questions on today's episode or on how to lean out your business, join us over in our private Facebook community where every week we do live training and Q&A, and I'd love to have you be part of the conversation. Head to leanoutmethod.com/group to join us. And before you go, be sure to subscribe to the show so you're the first to know when we release a new episode. We'll see you next week.